Berkshire sold another 115 million shares of Apple in this last quarter. That's Berkshire's largest holding.
You heard that right. Berkshire Hathaway has sold 115 million of its Apple shares, which amount to about $20 billion. So as you would expect, this was brought up in the shareholder meeting. People wanted to know what the reason for this was, and this was Warren Buffett's response.
I would say that at the end of the year, I would think it extremely likely that Apple is the largest common stock holding we have. Now, one interesting thing is that Charlie and I looked at common stocks or marketable equities or the things that people love to look at as being businesses. And so when we own a Dairy Queen or we own whatever it may be, we look at that as a business. And when we own Coca-Cola or American Express or Apple, we look at that as a business. Now, we can buy really wonderful companies in the market as businesses. We can't buy all of them. All of their shares. We can't buy 90% or 80% or anything like that. But when we look at Coca-Cola and American Express and Apple, we look at them as businesses. Now, there's differences in tax factors, there's difference in managerial responsibility, a whole bunch of things. But in terms of deploying your money, we always look at every stock as a business. And we have no attempt made to predict markets. We have no attempt made to pick stocks.
So Warren starts off talking about how Berkshire always looks at its investments as companies and not just stocks to invest in. He indicates that Apple is regarded as a wonderful company that will always stay a part of Berkshire's portfolio and as its largest holding of common stock. This he does, as he has in recent letters to shareholders, indicated that wonderful companies like Coca-Cola and American Express are companies that Berkshire intends to keep forever. He had not talked about Apple much, which after this sale left people with lots of questions. He then goes on to talk about taxes. This, as he explains, seems to be one of the biggest reasons for the sale. Here's what he had to say.
But I don't mind at all, under current conditions, building the cash position. I think when I look at the alternative of what's available in the equity markets and I look at the composition of what's going on in the world, we find it quite attractive. And one thing that may surprise you, but almost everybody I know pays a lot more attention to not paying taxes than I think they should. We don't mind paying taxes at Berkshire, and we are paying a 21% federal rate on the gains we're taking in Apple. And that rate was 35% not that long ago, and it's been 52% in the past when I've been operating. And the federal government owns a part of the earnings of the business we make. They don't own the assets, but they own a percentage of the earnings. And they can change that percentage any year. And the percentage that they've decreed currently is 21%. And I would say with the present fiscal policies, I think that something has to give. And I think that higher taxes are quite likely. And if the government wants to take a greater share of your income or mine or Berkshire's.
So Berkshire had to pay 21% of their proceeds from their sale of Apple stock as federal tax. That's a huge payday for the government. This begs the question, did they sell just to pay taxes? On the surface, that's what it sounds like. But knowing Warren, there's definitely more to it than that. Brendan van der Kolk from the channel New Money made a video about this not too long ago, and he talked about the 3 reasons why Warren could have made the sale. I'll leave a link to this video below. From what I gather, Warren sees a possibility of an increase in tax rates, which would mean that it would be more expensive to sell stocks that are in profit due to capital gains tax. He talks about tax rates being higher in the past and how in this current landscape, they are most likely to go up again. He further had this to say.
They may decide that someday they don't want the fiscal deficit to be this large because that has some important consequences, and they may not want to decrease spending a lot, and they may decide they'll take a larger percentage of what we earn, and we'll pay it. And we always hope at Berkshire to pay substantial federal income taxes. We think it's appropriate that a country that's has been as generous to our owners. It's been the place. I was lucky. Berkshire was lucky it was here. And if we send in a check like we did last year, we sent in over $5 billion to the U.S. federal government. And if 800 other companies had done the same thing, no other person in the United States would have had to pay a dime of federal taxes, whether income taxes, no Social Security taxes, no estate taxes, no, it's up and down the line. Now, I would like to, I hope things develop well enough with Berkshire that we say we're in the 800 club and maybe even move up a few notches. It doesn't bother me in the least to write that check. And I would really hope with all that America's done for all of you, it shouldn't bother you that we do it. And if I'm doing it at 21% this year and we're doing it at a higher percentage later on, I don't think you'll actually mind the fact that we sold a little Apple this year.
He now makes reference to the country's growing fiscal deficit and how the government has to eventually figure out how to fix it without cutting spending. One of the possible ways, as mentioned, is to increase taxes. He then mentions that Berkshire paid over $5 billion last year, which he says, if other companies would follow, would not only help reduce the company's debt, but also relieve the tax burden from its citizens. This is very interesting, as the biggest fear with most of the proposed policies for tax increases is that the businesses would find ways to pass down the burden to customers, which would not be very beneficial to the common man, but would rather leave him worse off. So Warren Buffett believes in giving back to the country which he is a citizen of, and on whose soil he has managed great success. So Warren Buffett for president, anyone? So far, all we've heard is Warren being very patriotic and talking about investments in the United States. But he does own some stocks outside of the States, right? What does he have to say about those then?
The BYD investment was we made the commitment in Japan, which I did 5 years ago, and that was just overwhelmingly, it was compelling. It was just extraordinarily compelling, and we bought it as fast as we could, and we spent a year, and we got a few percent of our assets in 5 very big companies, but that's the problem of being our size. But you won't find us making a lot of investments outside the United States, although we're participating through these other companies in the world economy. But I understand the United States rules, weaknesses, strengths, whatever it may be. I don't have the same feeling for economies generally around the world. I don't pick up on other cultures extremely well, and the lucky thing is I don't have to, because I don't live in some tiny little country that has just doesn't have a big economy. But I'm in an economy already that has after starting out with 0.5% of the world's population, has ended up with well over 20% of the world's output in an amazingly short period of time. So we will be American oriented. If we do something really big, it's extremely likely to be in the United States.
For those who might not be aware, BYD is a Chinese electric car maker which Berkshire has a sizable holding of and has had great success in. In Japan, Berkshire has stakes in 5 companies, namely Itochu, Sumitomo, Mitsubishi, Mitsui, and Marubeni, which Warren says were very compelling stocks. Above all of these, he still maintains that most of Berkshire's investments will be on American companies, especially if it's going to be something significant. Throughout the meeting, Warren made some comments about his late friend Charlie Munger and some of the great lessons that he learned from him. In a little light-hearted moment, he had this to say.
Charlie, in all those years, there's only 2 times. He would always go along with me and say, well, when I was suggesting something, he'd say, well, this is really not that great, but it's probably the best you'll come up with, so I'll go along with the idea. But Charlie twice has pounded the table with me and just said, buy. And BYD was one of them, and Costco was the other.
When he was asked to give his thoughts about generative AI, now that it's becoming more and more of a popular thing, this is what he had to say.
Last year I said, that we let a genie out of the bottle when we developed nuclear weapons, and that genie has been doing some terrible things lately, and the power of that genie scares the hell out of me. And on the other hand, I don't know any way to get the genie back in the bottle. And AI is somewhat similar. It's part way out of the bottle, and it's enormously important, and it's going to be done by somebody. So we may wish we'd never seen that genie, or it may do wonderful things. And I'm certainly not the person that can evaluate that. I had one experience that does make me a little nervous, and I'll just explain it. That very, very recently, fairly recently, I saw an image in front of my eyes on the screen, and it was me, and it was my voice, and wearing the kind of clothes I wear, and my wife or my daughter wouldn't have been able to detect any difference, and it was delivering a message that no way came from me. So when you think of the potential for scamming people, if you can reproduce images that I can't even tell, that say, I need money, it's your daughter, I've just had a car crash, I need $50,000 wired. I mean, scamming has always been part of the American scene. But this would make me, if I was interested in investing in scamming, it's going to be the growth industry of all time, and it's enabled in a way. Obviously AI has potential for good things too, but I don't know how based on the one I saw recently, I practically would send money to myself over in some crazy country.
This just shows you that Warren is still his old school self, very calculated and risk averse. He understands the opportunities that AI can bring, but at the same time, he's aware of the dangers of it, especially with the one experience that he had. So all in all, Warren Buffett still has a lot to offer as far as investing and business advice go. This video only covered a little bit of what he had to say in the morning session of the shareholder meeting, so stay tuned for more videos from that meeting. Now, I hope you found value in this video. If you did, please leave a like and even a comment too. While you're at it, subscribe to the channel if you haven't already done so, and turn on notifications so you never miss a video. Thanks for watching. The algorithm thinks you like this video, so head on over and watch it now. See you there, and remember to stay invested.